Well, you know, it's almost loan season again. And a very wise person told me this one time. If you want to have anything in life, you got to work hard, you got to save, and you got to take care of your credit. And you know, I've come to discover in my life that no truer words have ever been spoken. So I'm going to say thanks, Dad, for telling me that. You know, even though we live in a world of immediate gratification and self-fulfillment, there are some time-honored traditions that we still use to qualify you for a loan. I call them the 4 C's of credit. Let me give them to you real quick. The first one is character. How well do you pay your debts? You know, your credit score reveals a lot about you, like it or not. And we tier our loan rates based on grades. Let me give you an example. If your credit score is 740 or higher, we would call you A+ paper, and your rate is going to reflect that. In other words, it's going to be lower. If you're a 700 to 739, you might get assigned an A paper grade. 670 to 699 could be B. And then it goes all the way down to below 620, which we would call E paper, and those are subprime loans. But it doesn't mean that we still can't meet your needs, so don't disqualify yourself. But then the second C would be capacity. How much of a payment can you really afford? You know, the industry standards for housing to debt to income ratio is 28%, so you want to be sensitive to that. There's a total debt to income ratio for all type of lending that takes into account your home, not only your credit cards, and also your automobile payments as well. That usually is 50%. We like to see you below 50%. But don't, as I said, disqualify yourself. Always check with the credit union because our in-house standards can be somewhat flexible. Then there's collateral. What are you putting up for security? Some people say, well, do I have to have collateral? Well, your home could be collateral, car, maybe a motorcycle, a boat, and any other titled vehicle usually can be used as collateral. Some people will extend that out and do other things as well. And then there's capacity. How much money have you set aside in reserve? Dave Ramsey calls it emergency fund. We call it rainy day funds. It's that money you set aside that you can make those payments when the chips get down, so to speak. You know, at Kelly Community, we're in the business about doing loans. So whether you have good credit or questionable credit, I would ask you to come and speak to us because we're about helping consumers save more, earn more, and do more financially.